There should be a glut of dollars because all these dollars that formerly bought oil are no longer buying oil. Where do the dollars go? People don't want dollars. And people don't want American debt. And that's why the Fed's, creating the money to buy the debt.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Housekeeping once again, if you are new to this channel or you have not already done so, please do subscribe, click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We appreciate your support. Today, we have with us Rob Kirby, a well-known analyst of the financial markets and the editor of the Kirby Analytics newsletter. We're delighted to have Rob here again as our guest. Good day, Rob, and welcome back to SBTV. How are you doing?
I'm doing better than lovely today. This beautiful Tuesday morning here in Toronto, Canada.
That's painted a nice picture for me. I like that. I like that. Rob, after 4 years of hiking interest rates, the Fed is back to its rate-cutting self again. In fact, Fed Chairman Jerome Powell has announced that the Fed will start to grow its balance sheet once again. Do you expect interest rates to be cut back to zero again anytime soon?
Well, I think interest rates are on a clear trajectory, and that's lower. I think we can probably get back very close to zero, but I don't believe interest rates in America are going to go negative.
Okay. Yeah, I've been hearing that as well. Recently spoke to Danielle DiMartino Booth, and she's holding back. She's not ready to say it's going into negative territory. So I think we're starting to see more people come out and say exactly what you said. But before QE ever started, the Fed's balance sheet was at about $900 billion. After the 3 rounds of QE, the Fed's balance sheet ballooned up to a high of about $4.5 trillion. Of course, we know that since last year, the Fed tried to bring it back down, unwind a bit. They were about at $3.8 billion. Do you think it's still possible for the Fed's balance sheet to normalize back to pre-QE levels, or have we permanently said goodbye to the $900 billion level?
In my view, the notion that the Fed could ever return to a $900 billion balance sheet is a pipe dream. You see, I have a big problem with anybody who tries to have an academic or a realistic discussion about monetary aggregates, okay? I've listened to interviews of different people who are somewhat respected in the alternative community, making statements to the effect that monetary aggregates are basically whatever is outlined or defined by the St. Louis Fed, who is the keeper of monetary aggregates for the Federal Reserve System. And they say that there's X amount of money in circulation, or there's X amount of money in existence. And some people make claims that the Fed has been reducing the money supply over the last year or year and a half. And frankly, I say hogwash to all of that. People also make statements that the Fed, is on and off at different times with QE, quantitative easing. And I say hogwash to all that too. You see, to me, there's an overarching issue that nobody wants to talk about and nobody wants to address in a serious manner, except for the people that have done the work and done the investigation into it. And what I'm referencing here is missing 21 trillion.
Yeah.
That's been identified and documented by the likes of Catherine Austin Fitts and Professor Mark Skidmore of Michigan State University, a PhD economist, an expert in public finance, and his PhD staff, PhD student staff, who've documented that over the period 1998 to 2015, $21 trillion went through the books of either HUD or Department of Defense, DOD, and this money appeared on their balance sheets and then disappeared, and nobody knows or can explain where the money has gone. And this money is explained away as they have a technical name for it. It's basically it's unaccounted for money or irreconcilable balance sheet adjustments. And to me, this is completely and utterly rubbish, because the reality is this money was there and it did disappear. And I don't buy into the saying of some that oh, that's not real money. Of course it was real money. It was real money that was created fictionally out of thin air, and it's disappeared. And I call it the rainy day fund. It's dark money, very likely being housed in the Exchange Stabilization Fund, the secretive adjunct to the U.S. Treasury. Because, you see, in my world, I see evidence of untold amounts of money being put to work to create things that are counterintuitive to what should be happening. I mean, we live in a world where precious metals prices are absolutely ridiculously manipulated. We live in a world where the bond market is dystopic and delusional. And, the whole notion that America, being the biggest debtor on the planet, has never had a failed bond auction in the history of their auctions is absolutely unbelievable. And that's coming from somebody who spent 15 years professionally working in the bond markets. There's just no way. Everybody who issues debt in the world, except America, has experienced a failed bond auction at one time or another. I know that, having worked in the Canadian bond market and being aware of, and I worked in the U.S. bond market as well. But I mean, I'm aware of other countries that issue debt, whether it's Germany, who's a better credit than America. I mean, these are entities that have all at one time or another had, either an abandoned auction or a failed bond auction. So, but never in America. Absolutely never in America. It can't happen, right? Because the dollar's strong, and everyone loves the dollar. Well, you see, it seems to me, Patrick, that in the last few years, we've seen countries go from let's get into some crude oil issues. I mean, Russia stopped selling their oil for dollars. Okay, that's a fact. Iran doesn't sell oil for dollars. That's a fact. We know that Libya, when they stopped selling oil for dollars, they got invaded. When Iraq stopped selling oil for dollars, they got invaded too. Venezuela's, probably in danger of being invaded because they also are selling oil for other than dollars. So, what did I just name there? 5 countries that stopped selling oil for dollars. This is all relatively recent phenomena. Okay, well, the money that used to go into buying the oil for dollars, those dollars have disappeared. Okay, so my intuitive response would be that there should be a glut of dollars. There should be a glut of dollars because all these dollars that formerly bought oil are no longer buying oil. So where do the dollars go? We're told that there isn't enough dollars in the world. You see, and the only way that I can reconcile that, because there should be a glut, but there isn't. Well, lo and behold, in the last 4 or 5 years, since 2015, America's ramped up their oil production to 12.5 million barrels a day, record high production for America. So they've strapped on a good 4 or 5 million barrels of output per day in the last 4.5 years. And I mean, why did and the other thing about these incremental barrels that have been created in the last 4 or 5 years, they're all coming from shale, shale oil, shale energy. And I mean, the break-evens on shale natural gas, for instance, are all in excess, depending on the field, their break-even prices they need to make a penny range anywhere from low $3 up to mid-4s. And, the price of natural gas is trading at $2.30. So they're losing money on every unit of natural gas they produce. and they're losing virtually money on virtually every barrel of crude oil they produce through shale, because the break-evens on crude oil from shale are in the high 50s at best, and we got prices in the low 50s. So, who's underwriting this? Okay,
Yeah.
how is it that this can be a growth industry that loses money? I mean, normally, intuitively, one would think that when industries are hemorrhaging cash, they would curtail operations or cease operations. But that doesn't apply to energy. And then I say to myself, well, who's underwriting it? You see, and that's where I believe I'm going to call it the strategery of stealing $21 trillion and putting it in a rainy day fund. It allows you to do things like create an entity that would soak up unwanted dollars. Producing energy on the part of America is creating something that will basically soak up the dollars that other countries used to have to buy, or dollars that used to purchase, call it Russian, Iranian, or Venezuelan crude. So at the end of the day, there are absolutely dark forces at work throughout our capital markets, whether it's in the equity complex, whether it's in the bond complex, whether it's in the energy complex, or whether it's in the precious metals complex. I see dark forces and dark hands at work everywhere. And the maintenance of all of these, in my view, flat out fraudulent regimes, the maintenance of them all is not a cheap thing to manage. It's a very expensive undertaking to make sure that bond auctions never fail. It's a very expensive thing to hold the price of paper metal down when the physical market is on fire. This screams at the notion that there is indeed a massive amount of money that's sequestered somewhere, that's being put to work on an as-need basis. And this to me is the story of the missing 21 trillion. And it's being deployed on a very strategic basis, on an as-need basis, to make the dollar look strong. When 5 major oil-producing countries stop selling their oil for dollars, how do you describe that other than dollar rejection?
Yeah.
How do you describe that other than to say people don't want dollars and people don't want American debt? And this is why the Federal Reserve has had to step in and be the buyer of last resort of American debt. People will buy American barrels of oil in dollars when America produces extra, and they're producing them at a loss. But that's fungible. People will buy that because it has utility. But people do not want their American debt anymore. They don't want it. And that's why the Fed's, creating the money to buy the debt, because the banks have this stuff on their balance sheet. The banks, the dealers, the hedge funds, and they can't move it because there are no buyers. Because America's tapped out the rest of the world in terms of how much dollars they're willing to take. So there's a big problem in the world because dollar rejection is occurring, and I would argue it's accelerating as we move along the timeline.
Yeah, totally agree. I know in Europe, I believe there's 8 more countries in the EU that have joined the SWIFT alternative, which is Instex, INSTEX, and it's further fueling the de-dollarization narrative that's growing, just as you're saying. Do you agree that perhaps part of this also is because the U.S. has turned the dollar into a weapon to coerce other countries into following its foreign policies?
Well, yeah, I mean, there's that aspect to being an impetus for dollar rejection. But, Patrick, I view it a little more simply. It's like when Skidmore, when Dr. Skidmore and Catherine Fitz published their findings about the missing 21 trillion, they questioned the White House about this, and the Department of Defense got very, very defensive, and they tried to basically kill the links, because Skidmore and Fitz, they linked back to the government's own raw data in the case of the Department of Defense to show that their work was, based on real government data. And so the first thing the DoD did is they killed the links to the real data, the government data, and they thought they could by making it disappear, they could make the problem go away. Well, when Defense did that, the White House freaked and said, "You can't do that. You got to put the links back up," and they did. So then, what do we get then? We got the White House ordering a full audit of Department of Defense for the first time in history. They failed the audit miserably, and so the response to the Department of Defense failing the audit is that they brought in a new piece of financial regulation called FASB 56. And the upshot of the introduction of FASB 56 was that it gave the U.S. federal government an excuse to not publish accurate financial statements. So in effect, the federal government in America has been excused from accounting when they were asked fundamental questions about how much money there was. Okay, and this is why dollar rejection is where it is, and this is why it's accelerating. Because if I'm a Chinese bureaucrat, or if I'm a German bureaucrat, or a Japanese bureaucrat, and I'm settling all of my international trade accounts in US dollars, and the people who issue US dollars won't answer fundamental questions about how many dollars there are, why am I going to continue settling my accounts in that currency? Only a lunatic would do that. So, I mean, this is outrageous, and this is what the world's having stuffed down its throat, and the world's just saying, you know what? Fine, we'll develop our own payment system, and we'll deal in other currencies, or we will find an alternative that's more honest than the way America has absolutely demonstrated that they're crooked. They're cheating the world with their currency. And you know what? The rest of the world is galvanizing against this, and they're saying no more. So dollar repudiation will continue, and it will accelerate, and it will heighten. And there's some people in the Western world refer to, if you've ever heard the term, a Wile E. Coyote moment. And that's from cartoon lore, when the Roadrunner and the Coyote are racing around on these narrow roads up on cliffs, and Wile E. Coyote runs off the cliff. He can't make the turn, and he runs off the cliff, and for a minute he remains suspended and way up high, and then he pulls out his umbrella and he says, "Yikes!" and down he goes. I believe the dollar is going to have a Wile E. Coyote moment, because the dollar is held up by basically it's the military threat of America. That's what is keeping the dollar where it is today. But you know what? The rest of the world isn't going to stand for America bullying them to take the dollar forever. So that only lasts for so long. And the biggest bully on the block is the biggest bully until a bigger bully comes along, or until people get sick of the antics. And then things change, and they can change very quickly once they turn.
Yeah. I tell you what, talking about the Wile E. Coyote, things were much simpler then, when we could just wake up Saturday morning and watch cartoons all day long. But all of this pretty much seems to be tied into the petrodollar. It's a deal that's about 45 years old, getting close to 50 years old. It was a deal made when the U.S. was the biggest oil consumer, Saudi Arabia the biggest oil producer. But the deal is outdated. And do you think this petrodollar, will it end peacefully? Will it be renegotiated, or are we headed into some dire times ahead?
I think conflict is in the future because the people, or let's just say the stewards of the American dollar, are not going to give up their position of power easily, and so no, this won't be an easy transition. I mean, when you consider this, we are told, or in the mainstream media, and I actually had subscribers question me about this in the last 2 or 3 weeks. They they say that America has achieved energy independence. I mean, you hear that buzz in the markets like recently, that and America has not achieved energy independence at all. America consumes 20 million barrels of oil a day, and they produce 12.5 million. So when you're consuming 20 million and you're producing 12.5 million, you are not energy independent. Okay, I mean, but what has happened is they've conflated the notion that America doesn't rely on Middle Eastern oil anymore. But I mean, America's taking in over 4 million barrels a day from Canada. And America's taken in, I believe it's close to a couple million barrels a day from Mexico. But the amount of Middle Eastern oil that they require now is basically down to zero. So, but I mean, that's not energy independence, unless you consider Canadian oil really just American oil, but with a different flag flying over it for some reason. But I mean, and me can only wonder what would happen if Canada decided to sell some of its oil for euros or a different currency. I think we would become very unpopular very quickly. So, not to say that that's what Canada should do. I mean, our biggest trading partner is America, but I mean, I'm just raising the question. You know, what gives the dollar its sustenance is crude oil. And when big amounts of barrels are no longer priced in dollars, it creates problems for the dollars unless you can create a new home for those dollars. Because like if you've noticed, America's deficits aren't getting smaller, they're getting bigger. And they're running at plus $1 trillion a year.
Yeah.
So
okay, so I mean, I guess given that you are expecting a weaker dollar in the future, as it's probably happening now, we just haven't really seen it yet. Do you expect we're going to see gold prices start to spike?
You know, that's a good question. Gold prices should be, at least in my view, Patrick, gold prices should be multiples of what they are today, right now, and they're not. And so why is that happening? And the only thing I can say to that is that American regulators have laws on the books, like there's commodities law that states basically that what has happened in the gold market and the silver market should never ever be allowed to happen under law. But law isn't followed. And we have regulators in America at the CFTC, Commodities Futures Trading Commission, who don't regulate. Okay, so speculating about when or if or to what extent the price of gold or silver will go up is really a question about when will American regulators start regulating. So, and personally, right now, I don't see any impetus or any inclination of American regulators to regulate because they refuse to regulate. There's in commodities law, they have laws that state that, issues of concentration, are basically outlawed. But, in the gold market, people can sell in paper form. In one day on an exchange like COMEX, they can sell the equivalent of all the gold that gets mined out of the Earth's crust in a year. They can sell that in 6 hours. This is gold that doesn't exist. It's not for sale anywhere in physical form, but people are allowed to sell it in paper form or digital form, like in unending amounts. Same thing in silver, even worse. And I mean, this is completely and utterly ridiculous. And there's laws stating that it shouldn't be happening. But when you've got regulators that don't regulate, it's sort of like, when you've got laws against, let's say you can't murder anyone, but you've got a sheriff who doesn't own a gun and has no interest, and he doesn't have a car to catch anyone. And it's like, and he's looking the other way. And he doesn't want to hear about anyone being murdered. So you end up with, in the case of, the sheriff who doesn't do his job, you end up with a lawless society. Well, in our capital markets, it's become lawless. And what we have is the biggest bully on the block wins. And the biggest bully on the block basically is the Exchange Stabilization Fund and the U.S. Treasury, which do the price setting in the precious metals markets. And they also intervene covertly, I would say, or I would suggest. They intervene covertly to basically bid up U.S. bonds and ensure that bond auctions never fail.
Yeah.
Plain
Rob,
simple.
Okay. Rob, in your neck of the woods, and I know you deal with the very wealthy from time to time. Well, what are you hearing from them? What are they doing? What are they seeing?
Well, everybody knows there's something wrong, okay? And, even if they can't put their finger on what it is that's wrong, but people express openly that things aren't right and that things are dystopic. And, I mean, for the most part, people just hope they're going to muddle their way through. And, a lot of people who have means in today's terms, in terms of fiat money, a lot of them assume that their fiat money will protect them as long as they have enough of it. And, in my view, I look at what has occurred in recent years in countries like Venezuela. Venezuela used to be one of the wealthiest countries on the planet. Argentina is another country that used to be one of the wealthiest nations on the planet. And I mean, their economies, through the ravages of hyperinflation or the debasement of their currencies, the very wealthy became paupers very quickly. And this is what can happen when people lose faith in fiat money. And in my view, we have an unfolding, what will be recognized as a major crisis globally, with dollar rejection underway and accelerating. And I mean, most of humanity is Wile E. Coyote chasing the Roadrunner. And, they're going to reach a point where they think they can make a hairpin turn, and they're not going to make the turn, and their fiat isn't going to keep them suspended in thin air when they go over the cliff. But I mean, look, there are Fed governors through the years. I think it was Fisher was the head of the Dallas Fed,
yeah,
who back 10 or 12 years ago spoke about the dollar in we got a couple of glimpses of candor from a central banker when he stated that the dollar is a game of confidence, and we're going to do everything in our power to keep people believing in the dollar, and basically saying we have to get that right. Well, I mean, this is what they're doing, and the way they get us to keep believing in the dollar and make us believe that the dollar's strong and that the dollar's scarce is they create artificial scarcity, okay? When people are getting rid of their dollars and don't want dollars in trade, they have to make them look like they're scarce and unavailable. And how do you do that? Well, in the case of America, they ramped up their oil output by an extra 4 or 5 million barrels a day. And that has a way of soaking up excess dollars that are in the system and making them look scarce. If the dollar wasn't being rejected, countries would be wanting to sell their crude oil for dollars, but they're not. they're selling them for any currency but dollars in a great many cases. And I mean, is it any look? And if the dollar was strong, wouldn't people be buying U.S. government debt? Would the Federal Reserve really need to be buying or doing repos on that debt on a daily basis to give that debt a home and to make it liquid? The reality is the rest of the world doesn't want dollar-denominated debt anymore. Okay, and we're witnessing it. We're seeing it happen on a daily basis. How can you explain what's going on in the repo market other than dollar? It's dollar rejection, plain and simple.
Okay, yeah, that's very concerning, because I've kind of said something along the lines like this before, where if on one side of the Atlantic, dollars are coming back home, and then on this side of the Atlantic, we're printing more, are we staring at hyperinflation?
Well, Patrick, I would argue that technically we probably should be there now. But if America hadn't, you see, the dollars are coming home, except right now those dollars are going into basically purchasing oil that's being produced at a loss, and effectively the dollars are coming home and they're disappearing into a black hole. And that way they're not inflationary, because there's no profit being made on any of this, but the energy priced in dollars, people will buy it because it has utility, and so that's occurring. But you see, if America wasn't producing the extra 4 or 5 million barrels a day, those dollars would still be coming home, and they'd be looking for something else to purchase that hopefully has some utility. And without the massive increase in American oil production, we very likely would be experiencing something approaching a hyperinflation now. Anyway, all I'm saying is that as the dollars continue to return home to America, they're either dealt with in some fashion to make the dollar look like it's still wanted, or they pile up and the confidence is broken in the currency, and in which case then everybody starts spending dollars trying to buy something of value all at once, and that's called hyperinflation.
Yeah, okay. Rob, last question. We're seeing the signs of de-dollarization already happening, and the decline of the U.S. empire all point to a new monetary system. You think gold is going to have a role in the next monetary system?
I believe it will, and that's why you need to own it now. Even though it's being suppressed in the digital and paper markets, ownership of physical metal, when the confidence finally breaks, to me it will be like a dam bursting. And when the dam bursts, you either will own physical metal or you won't get any, plain and simple. And ownership of paper proxies for physical metal are not going to get you physical metal when the dam breaks. And to me, it's only a matter of time, not a matter of if the dam breaks and the confidence breaks in the currency. So you've got to be positioned before it breaks, and it will. So, I maintain that forever.
Okay, yeah, I hear you, Rob. Totally agree. I think you've cleared things up so much that it brought upon more questions for us that we're going to have to hold the people in power to. But before we wrap up, Rob, can you let our listeners know more about your work over at Kirby Analytics?
Well, I do proprietary forensic macroeconomic research, and I publish my findings when I feel I have something to offer, and I do a fair amount of media. And you can catch me on the web at kirbyanalytics.com.
Rob Kirby, we thank you for coming on the show. It's been another great experience with you, and we hope we can do it again soon.
Look forward to it.
That was Rob Kirby, editor of Kirby Analytics. To find out more about his work, please visit kirbyanalytics.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.